Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies and their PLTR stock. Regarding the latest news updates for Palantir Technologies, they recently landed a phenomenal contract with Trafigura, plus we also need to talk about how they are in the running for a huge contract, which I think they will be awarded, which is worth up to $600 million, and then lastly, we're going to talk about how legendary investor Peter Lynch would value Palantir Technologies as a potential investment opportunity and whether or not he would buy, sell, or hold Palantir Technologies as an investment. So for more videos on Palantir Technologies, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, don't forget to become a member of this channel to support me personally for as little as 99 cents per month, but if you can't afford that, don't worry, by subscribing, you're going to get this content for absolutely free. And with that being said, I say let's dive right into today's stories. The first story we're going to talk about is how Trafigura and the US software developer named Palantir Technologies, which is a big data analytics company, recently launched a platform to calculate carbon emissions in supply chains for the energy sector. Essentially, with Trafigura and Palantir Technologies combined, they have created the Agora platform, which enables collaboration on carbon emissions information and carbon intensity benchmarking and analysis. And this platform comes at the perfect time considering the emergence of the carbon industry, which is still plagued with a lack of clarity and transparency regarding its data. The partners, referring to Trafigura and Palantir Technologies, originally wanted to create this platform for the metals industry, and they did this last year, and they have now extended it over into the energy sector, with the first users of this platform being major oil companies like BP, Ecopetrol, and Trafigura themselves. One of Trafigura's co-heads of oil trading even said that he believes that carbon intensity as a commodity specification can enable greater visibility of low carbon alternatives. So essentially he's saying that this is a very needed platform from Palantir Technologies and it is going to be very useful going forward. This is going to allow Palantir Technologies to land a plethora of new contracts, especially when we consider that this platform is going to be able to be utilized across multiple industries and sectors, including use in the metals industry as well as the energy sector. So overall, I would say this is a very positive news update for Palantir Technologies. However, I do want to bring to your attention to a huge contract that they could be landing. If you recall, back in the day, the UK's government, also known as the United Kingdom, awarded Palantir Technologies a £27 million contract due to the former head of MI6, which is a foreign intelligence service, arranging a meetup between Palantir's CEO Alex Karp and the Cabinet Office Permanent Secretary, and this led to Palantir Technologies winning a $27 million contract. Fast forward a little bit, due to this existing relationship, Palantir Technologies worked its way into a contract with the NHS, to where Palantir built them data stores, which led to other contracts with the NHS that were worth around $25 million. And since this pre-existing relationship with Palantir Technologies and the NHS, we could see Palantir Technologies potentially winning their upcoming £480 million federated data platform contract. And when we convert pounds into US dollars, that would mean that Palantir Technologies could potentially win a $600 million contract. So this could be a huge contract that Palantir Technologies could win, and I think they are a shoo-in to win this contract considering their existing relationship with the NHS. However, not everyone is overly excited about this because a conservative MP named David Davis told Open Democracy says, and I quote, "Directly awarding contracts to Palantir without competition or indeed proper public oversight is a recipe for disaster. That practice must stop." So a little background, if you read this article all the way through, essentially Palantir lobbied their way into multiple contracts with entities over in the United Kingdom. And this allowed Palantir to literally gain contracts before any other competitors were even potentially recommended for the job. However, I think it's brilliant of Palantir Technologies to do this. Honestly, their technology is better than their competition's anyway, and for them to be able to steal contracts like this just shows the power of internal networking that Palantir has because they have so many great connections. That's why I think Palantir Technologies is going to win this £480 million or $600 million contract from the NHS. If Palantir does win this is going to be a phenomenal catalyst for the overall share price going even higher to where right now they're trading for around $15 per share. However, let's jump to our next story to determine whether or not Palantir Technologies is a good buying opportunity, a selling opportunity, or a holding opportunity. And we're going to be using metrics that one of the most legendary investors used, which was none other than Peter Lynch himself. If you don't know who Peter Lynch is, he is a super legendary investor, one of my all-time favorite investors in history, and we are going to be using some of the metrics that he talks about regarding how he valued stocks and whether or not he would buy into them, to where this has allowed him to identify companies that literally 10x'd in price, and that's exactly what we want to be able to do. And for many investors, their biggest gains come from fast-growing companies. So identifying just one or two of these companies and adding them to your portfolio can literally benefit you for decades to come. So trying to catch these or identify companies like this also comes with a lot of risk, so high risk, high reward. However, fortunately for us, Peter Lynch provided a comprehensive guideline for investors who want to identify the risks and the rewards for companies just like this, which leads us to talking about Palantir Technologies, regarding how Palantir Technologies stacks up versus Peter Lynch's criteria, and whether or not Peter Lynch, by his own standard, would buy, sell, or hold Palantir Technologies. We're going to examine Palantir's AI potential following Peter Lynch's framework, which should tell us how good of an investment Palantir is. And to illustrate Peter Lynch's criteria, the author has broken this down into 4 main segments. The first one is we want a scalable leader, which is particularly involved in a fast-growing industry, which Palantir passes with flying colors. They are growing pretty aggressively, and since they are in the AI space, artificial intelligence is intended to make trillion-dollar markets. So clearly Palantir is a scale leader in the burgeoning AI sector, according to the author, and Palantir Technologies is still relatively small compared to other technology giants within their same space. Except I personally would disagree slightly. I think Palantir is already a pretty big institution, to be honest with you. But overall, they seem to pass criteria 1. And for the remaining criteria, we are going to dive deeper into them. So criteria number 2 is that Lynch strongly encouraged investors to invest into companies with good stories, and we will define what good stories are later in this video. The number 3 criterion is rapid growth ahead. We want to see this company growing their earnings and revenue at around 20% or at least a 20% margin. And then last but not least, we want to identify a company that is reasonably valued. We don't want to buy overpriced growth companies, because inevitably the market will correct those prices to where they will drop down in price and not recover very effectively. And the author makes this clear by saying that he does not recall Peter Lynch advocating for a, quote, purchase a growth stock at any price strategy. And I would 100% agree with that. We want to get good deals on the companies that we buy, and if we want to be as effective as Peter Lynch, we would want to look at a company's PEG or PEG ratio, which takes a company's price to earnings ratio and divides it by their overall growth rate. And this should become a routine for investors. Ideally, we would want a PEG ratio that's around a 1 or lower, and that would signify a reasonable valuation. However, if the company is around 1.3, it would give us some mixed signals, but overall this still could be a good company depending on how long you plan to hold the company. But now, since the criteria has been laid out, 1, 2, 3, and 4, we can now talk about the criteria, starting with number 2, considering we already verified that Palantir passes check number 1. So let's talk about their good story. Palantir Technologies is literally a leader in the artificial intelligence space, and this is already a good story to see. They are ranked as number 6 compared to Microsoft, Alphabet, which is Google, Nvidia, Tesla, and IBM, meaning that they have a lot of growth to do to catch up to these technology titans. This signifies that Palantir has a good story because they are riding that artificial intelligence wave, and they can further capitalize that over the long term. The author is also arguing that Palantir Technologies is not too big, especially when we compare them to companies like Microsoft and Google, even though I personally think this is slightly unfair. Microsoft and Google have loads of different revenue channels that Palantir does not have access to, so I don't think these are pure AI plays. So it would be better to compare Palantir to other data analytics companies which also use artificial intelligence, but I've done that in a prior video, so feel free to check out the prior video that I did on Palantir Technologies. But overall, this just signifies that their addressable market is absolutely gigantic in both their commercial and government segments, meaning that Palantir's AIP platform will be able to use their LLMs or large language models to help both commercial enterprises as well as government agencies. And the ability for Palantir Technologies to crunch and interpret large data sets to where people can type into a large language model for Palantir to do something with all of that data is very innovative. But what about their growth? As we mentioned before, we want to look at how fast the company is growing. We want to identify fast growers, and Peter Lynch prefers companies that are growing at around a 20% CAGR in regards to annual growth. Luckily, their revenues are projected to grow from $2.21 billion in 2024 up to $5.3 billion in 2028, implying a 19.2% growth rate, which is barely below that 20% that Peter Lynch normally looks for. And we can also see that their profit margin is also around 20%, which is more good news. Now, regarding their overall revenue, the company has had very volatile revenue to where the company experienced in the past very high revenue growth of approximately 50% year over year. However, in the most recent quarter, that dropped down to around 12.7%, which is anticipated to rebound back up to close to 20% in 2024 until 2028. So that rebound is going to be very beneficial for Palantir Technologies. It's going to show up in their overall earnings reports, and hopefully it gets investors excited about this. But more importantly, it meets Peter Lynch's criteria, or at least gets extremely close to it, coming in at 19.2%. And if the business manages to grow at a 20% CAGR in regards to the revenue and bring in around a 20% net profit margin, that would assume 5 straight years of continuous growth, which is projected at least out until 2028, implying a PEG ratio or a PEG ratio of approximately 1.3 times, again, just barely above that 1 times threshold. So to recap, we are seeing mixed signals from PLTR. So when we go back to our summarized criteria, they pass criteria 1 with flying colors thanks to their innovation in the AI space. Do they have a good growth story? I would say yes. They also pass this overall criterion thanks again in part of their artificial intelligence platform named AIP. Now this is where things get a little shaky. For fast growers, Peter Lynch prefers to see annual earnings growth of 20% regarding their overall earnings, potentially a 20% margin, and a 20% CAGR in regards to the revenue. The revenue is anticipated to be at a 19.2%, and their margins are just below 20%. So again, they technically do not meet this criteria outright. They are just underneath Peter Lynch's minimum. Lastly, let's talk about their valuation, which is where their PEG or PEG ratio comes in. Again, Peter Lynch looks for that 1 times PEG ratio, while Palantir Technologies, given their current growth rate, even after 5 years in the year of 2028, would only have approximately 1.3 times. And ideally, we would want that to be lower, meaning that they are technically trading at a premium right now. So they do not meet this criteria at all. So with Palantir passing criteria 1 and 2, but not passing 3 and 4, Peter Lynch would rate this company as a hold rating. He would not say to sell this company, but he would also not advocate to buy this company right now. Instead, like we said in the very beginning of the video, we do not want to buy companies that are overpriced or overvalued. The author even said that he does not advocate for a purchase a growth stock at any price strategy. So because they don't pass 4, we can just wait for the company to pull back in their price a little bit. Probably between $9 to $12 would be ideal, but I would love to hear your thoughts on Peter Lynch's hold rating for Palantir Technologies, at least given his criteria. With that being said, I would love for you to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.